All right, hello everyone. Just want to do a quick little rundown of what happened in the market today, and really not much. Pretty darn slow. Not surprising because a lot of people are on vacation. Tomorrow's the last day of the year, and might be a little stuff going on, but I think tomorrow's going to be pretty slow. Um, but regardless, let's look at some levels. Let's think about what we can think about going into the next year, because I think we're going to get some movement in the next 2 weeks as we go into the new year. I think that markets are really overbought. I think that sentiment is at extremes. I think that a lot of things have really just been going sideways, and this all sets us up for an impending move. The only guarantee on Wall Street, other than death and taxes, is that the trend will change. So, first of all, let me show you gold. Look at where it is, 2076. Look at this black line, 2085. Resistance back in 20, resistance again in March of 22, resistance in May of 23, resistance a month ago, resistance again now. Notice how things tend to sell off of resistance. Well, this is because resistance is this big group of sellers who want to sell around the same price. And sometimes they start to realize, oh, gee, there's other sellers around here. That's why the price isn't going any higher. And they start to sense these other sellers are coming in, and they start to get worried. So they start to undercut each other because buyers are going to go to who's ever willing to sell at the lowest price. So we could see a reversal here in gold. That's one thing to look at. I think that the biotech sector is extremely overbought. We're going to look at, actually, I'm sorry, the biotech industry. The healthcare is the sector, the industry is biotech. But look at this, very overbought, meaning that trading above its typical or usual or historical average range. Overbought conditions draw sellers into the market because they think that the market's going to reverse or revert to the mean or the average. And it's a very common strategy on Wall Street for trading on Wall Street trading desks is this reversion to the mean. So we're at a price level where there's a lot of sell interest, and these overbought conditions are going to draw sellers into the market. So could set the stage for a move lower. We got to wait though for it to happen. We don't want to just jump in. All right. A lot of traders try to pick the exact top and they end up losing money. So that's our biotech. Now let's look at the healthcare sector, of which the biotech industry is part of. And here's our healthcare sector. And as we can see here, once again, we're up to this really clear, well-defined price level, which is actually kind of amazing if you think about how many trillions of dollars this sector is worth. And yet somehow all these things come together and get us resistance at these precise levels. So again, sometimes the sellers notice, hey, we're not going up anymore. There must be new sellers lurking in the side wings over here. Side wings? Is that the right word? Side lines? Anyway, you know what I'm saying. And they might get nervous and start to undercut each other. So this is at resistance. So the market really looks kind of healthy from the chart perspective. And when this happens, what do? You just go with the flow. The trend is your friend. You go with it. But from the sentiment point of view, I think we're really at an extreme in terms of how many people are bullish. This is the inflows of the S&P 500 ETF a week ago. Not only is it the most ever, it's like more than twice the most ever. So this is huge. What this means is that so many big buyers show up to buy the S&P ETF that the market makers literally short them the ETF. They just create new shares, short it to them, and then the money goes into the fund. And ETFs make money by charging fees on what the money that's in the fund. So anyway, that's neither here nor there. The bottom line is that this shows extreme bullishness. Want to point out Nvidia too, which is another sign of extreme bullishness. A couple of weeks ago, it reported this blowout earnings, and guess what? Didn't move. And guess what? That was a sign it was going to go lower. Since come back, but that was a huge move lower, like a 10% move lower. Once again, it's below this important resistance. But think about it. Like in the institutional world, firms or investment funds, they buy a certain amount of shares. Typically, it's a percentage of their portfolio. okay, we got $1 billion. We're going to buy a 3% position in NVIDIA. So that's $30 million, right? Or we're going to buy 20 positions and have 5% each. That's really the typical thing that happens. Once their position is full, once they got a 5% position of NVIDIA or 3% or whatever it is that they wanted, there's no need to buy anymore. They got a full position. So it doesn't matter how good the earnings are, good, bad, indifferent, they got a full position. They're not going to buy anymore. So when you got everyone who pretty much wants to buy NVIDIA has a full position of it, what happens? There's no buyers left. And if there's no buyers left, what happens? There's no one to push the price higher. Prices go higher because buyers bid the price up. If people that want to buy have full positions, no one's left to pull the price up. All right, so that's NVIDIA. I think it's kind of important. Apple's kind of trending lower a little bit here. Oil kind of reversed. Well, not kind of. A little bit of a head fake here. I thought we were going to move up, but a lot of times when we don't break out, we get the false breakout. And that in and of itself is a good contrarian signal. So I know a lot of our students or our community reverse their trades here. Not on oil futures specifically, but in oil ETFs. False breakout looks like it's going to break out, but it just turns around really rapidly. A lot of times it starts coming back the other way. And we've seen this on a few things. As a matter of fact, we saw it on gold, which is where we started, and I guess which is where we will end. But I will be back tomorrow. See, here's your classic false breakout. Looked like gold was going to break out. By the end of the day, we reversed, and then we had a big sell-off after. False breakouts in and of themselves are good contrarian signals. I know people think they get burned and run over and they get upset by a false breakout, but good traders are nimble and they can switch. Hey, I was wrong. I thought it was going up. I was wrong. I'm taking a small loss and I'm going in on the other side and I'm going to make a big profit on the way down. Nimble, not attached to a position. All right, everyone. Thank you so much. And I will see you soon.